Hi everybody and welcome to this weekly Forex update with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday, the 3rd of March 2013. Well, we had a really explosive end to the week last week, and we start the week with some very interesting moves and new paradigms even for the FX world. We saw on Friday, a very heavy selling of the pound, of the euro on the back of some very weak economic data. And in contrast, we saw the dollar really surge. Now, there were two things driving the dollar on Friday. Number one, better than expected PMI data, so some better economic data coming out of the US, just highlighting how bad things are in Europe, and also the sequester. So as the end of the day, at the end of the trading day anyway, on Friday in the UK, the sequester, there had been no deals, so we were just waiting to see if those cuts were going to be in place. Now that's going to be played out today, and if, as expected, the cuts went ahead, then what we could see is a little bit more risk aversion join these markets, which should benefit the dollar even more. Let's take a quick look here at euro dollar, because this is going to be the big focus this week. We think it's going to be a big week whereby everyone's going to focus on euro dollar because of the ECB. Now on Friday we saw two data points which really tell the story of this sharp decline that we saw on Friday in euro dollar. We had a record high in unemployment, and we also had very weak inflation data. So February inflation fell to 1.8%. That's below the ECB's target rate of 2%, which now opens the way for the ECB, when they meet on Thursday, to maybe loosen monetary policy in some way, cut rates, maybe embark on some sort of QE program. It sounds very radical. Well, it certainly sounded very radical in recent months, but there really is expectation building now that they will loosen the monetary taps, if you like, to try and boost the economy in the Eurozone. And that's why we saw on Friday euro dollar get below 130. 128.50 now is the 50-day moving average, the yellow line on that chart, and that's where a lot of people will be targeting. So we could easily get to drift lower to 128.50 as we lead up to the ECB meeting. Remember, Draghi had a good way of keeping the euro very low last time. Well, he's certainly got what he wants, so it'll be interesting to see whether or not he can do the same, back it up with some action this time, which could get us another leg lower, maybe back to that 128.50 mark, maybe even down to 125. The other thing I want to show you is gold. There's been some violent moves in gold, as you can see here. Last week was very, very volatile for the yellow metal. It didn't know if it was coming or going. We saw gold shoot up on the back of QE expectations, especially from the ECB, but then it did kind of come off a bit as well. There's no real inflation anywhere in the world apart from the UK. And that's been kind of one of the things keeping gold quite repressed. Now, we tend to think that gold is going to fall further. As you can see in the chart in front of you, gold is fast approaching a really key support level at 1550. I think if we get below there, we could get down to those 1450 lows, which is the 100-week moving average. The upside does seem to be capped at 1600 for now, but we would expect a bit more volatility, and the closer we get to 1600, we think there will be a lot of selling interest coming in, and that any kind of pullbacks in gold will only be temporary. So do watch out there. But a lot to digest this week, lots of central bank meetings and central bankers speaking. It really is going to be, that's where the focus is going to be, especially on Europe on Thursday. So do join us next week for more, but thank you for joining today.